on the numbers from this chart because we trade SPX, and we just deduct 10 points from this and get our SPX number. So this is not where the trade is. Obviously, this is what we're watching, right? So yesterday we knew it was going to go hit this number very likely. This was a scenario, and I don't know if anybody has that. If anybody heard the recording, you will see these numbers, right? And played out to a damn T 103.85 area. Right. So what next? If it comes back up and hits this number again, and if it clears this number, then we are looking at a hit of this number right here. And there are pretty decent chances of that happening. Why? Because this chart is still oversold. It needs to get resolved, and it's almost getting resolved here, right? RSI has hit the top, and we want to see actually that thing pull back down. After that, very likely, I think it'll come back up and take another, just like we saw yesterday, hit that first hit, this one took a breather, second hit of 8 took a breather, coming back up and hitting this number here, taking a breather, same thing. If it clears here, then we are expecting it to hit this yellow line right about 104.10 and take another breather right there. That's the idea though. And after that breather, now this is where things will start to get a bit serious. If it clears here, then we are expecting it to move right about here, 104, 104.53. Then this is where it should, 104.53 is another resistance point. And after that, it should come back. And that resistance point is coming from this line. Extend this line, generally that acts as resistance as well. 104.52 area. But first thing, this right here, if it clears the highs of the day, 103.890 area, then we're going to expect it to hit this number right here at 104.10 area, 104.10, 115. Another breather. Then after that, it's expected to hit this 105.15 area, right? And this has to act as a pretty decent resistance. And if it clears here, then things get a bit rough. It's gonna go hit this. It'll try to go hit this number 106.50 area. But for now, I think the upper limit is right here, 105. Let's put that at 104. It's showing 105.15 area, but let's give it a range 105.15 to 105.20 or 25. So in general, this 50 moving average is what I'm watching. So this is where the trade is. Cool thing. And to extend this, well, of course, generally I watch this, but if you want to go front run the trade, this is what you should be watching. 3.65 is what we wanted to see this thing get tested, and it is doing that to a damn T right now. So if it clears here, then it's gonna try for this number 3.75 area, right? And we discussed this yesterday. But very likely a breather here, and looks like this line we want to see it continue to the upside. If it does continue to the upside, then very likely a mean reversion on the week is it's due. So I think it's it's just technical stuff. And let's say chair Fed chair sounds if Fed chair sounds hawkish today, then very likely we'll see this 10 basis points move to the upside on the 10-year, hitting about 3.75. No big deal. If it hits this number, mean reversion on the week, then very likely it's going to go for this number 3.83, 3.85 within that range, give or take, margin of error. So 20 basis points to the upside. And if Fed chair is okay, like, sounds like, he's going to go with that 5.5, which is the projected number right now. 5.5. If that he reiterates that, if that topic comes up and he reiterates that 5.5, then very likely we'll see some movement upside, 10 points, 10 basis points. But if he goes, beyond something beyond 5.5, is looking at 6 or something, I don't think he's going to say that. But just in case, then very likely it's going to push up another 10 points, 10 basis points to test this 3.85 area, right? So from 3.65 to 3.85, plotting nothing beyond that, unless something crazy goes on to the upside. Uh, I don't think that should happen, but just in case something goes crazy, then we'll see. We'll project further upside here 3.85, then we'll probably look for a push into 3.97 to 4. As of now, that is not the plan. And to the downside, if it starts to and let's say Fed chair sounds sanguine, or market perceives Fed chair to be sanguine, then it's going to come back into 3.59, which is where the 5 is, which is where the 8 is right now. Let's round that up at 3.59 to perhaps 3.58 area. Right? If it breaches there, then we'll reassess for the downside, perhaps into 3.52. So that's the game plan. This is where the trade would be, and 10 the dollar index will be moving based on what this thing is doing. Even if it's not one-to-one correlation, but still, by and large, that's how the correlation will work today. Let's go here, and we know this thing. Let's check US 10 year. Oh man, super slow today. Right. So hitting the resistance, fair enough. Now, if and the reason, this is the reason we talked about this yesterday, right? The MACD is crossed to the upside on the day, and if it starts to make a trend, then very likely we're going to see this thing come back up, clear this resistance, just like how Apple did. But right now, I think it should be tamed. But let's say if it clears this number, 3.67 area, then we are expecting it to push probably into 3.72 to 3.75 area, right? That's the plan. If so, basically the same thing from here, 10 basis points to the upside. If that clears, let's say if it clears 10 basis points, 3.75 area, then we'll go back right here and check for this area, 3.85 area. So all in all, 20 basis points to the up, 10 basis, then we'll go with another 10 basis points. And if it starts to push to the downside, then we are very likely to see a test of this number 3.58, and then the 50 moving average, basically that should be acting as a pretty decent bounce spot, 3.57. So that's about 7 basis points to the downside. Is it 7? Yeah, probably 8 basis points to the downside. And if it starts to come back down, and it especially if it breaks this back line, the 50 moving average to the downside, that's when you'll start to see the market rally again. As of now, this is not a concern. What I'm about to say, that the 10 year, if the 10 year starts to push to the downside below a certain number, then that will start to become a major concern. Right? As of now, that's not the case. But if it does start to pull to the downside, then it will become a concern. And then people think that it's if the 10 year comes down, then the market is going to rally. But that's a separate scenario, and if that happens now, this will be a separate scenario altogether, and that's what many people are calling for, a Fed pivot or Fed to lower the rates. But if Fed does that, then very likely you will see the market come back down within a month or two. So be very aware of that thing, or rather be very wary of that thing. Keep a close watch on that. I don't know if people follow here the 10 year, 2 year, or the yield curve inversion. Whatever you follow, keep a close watch on that. Your whatever the barometer that you're using, keep a close watch on that for the interest rates. Cool. Right. So this is where the trade will be, and I'll be watching this chart. Probably I'll go down here on the 1 hour chart, and I'll try to figure out if it's going to come back down here. It did violate the second standard deviation here and hitting the third standard deviation. And fair enough, it had come back down. Now if it starts to push to the downside, and if it starts to hit the 5, then probably market will start to move to the upside. And if it bounces from the 5, or even if it bounces from right here, then very likely you'll see some weakness in the 10 year. Cool thing. Let's go down here. And this chart is an important one. Well, actually, these numbers will adjust, right? These lines will adjust themselves. So wherever the 5 would be, I'll be watching that number, right? The 5 right now is at 150. Right, it's at about 150 right here. So if the after open, this 5 will adjust itself, right? Probably to the downside, very likely today, 149.50 or something like that. And I'm expecting it to get tested today at least, right? Uh, but I want to see that thing get tested. Probably, we'll look for a first bounce there. But if the 5 breaches, then we know the story. It's going to come back into 8. I don't know if the 8 is going to be here or further down, right about here. But bigger picture, if the 5 breaches, and this is the line that we're watching, right? 200 moving average, I would expect this to hold. In fact, majority of the market participants expect it to hold. and very likely they'll be playing, even if they're playing downside, they'll be playing, downside lighter. But if it breaches below this number, the 200 moving average, probably that's when you'll see shorts coming in with better volume, sort of a thing. So yeah, watch this line here, right? Watch this line. Very careful. So let's go here, and immediate trade very likely is going to come back down here into this black line, the 50 moving average on the week. This is where we'll experience first bounce. If it breaches down there, then very likely it's going to go down here into that five, and very likely 149.30 area. If that breaches, then it's going to test this number. So about 147.80 area. Right now, yeah, it's setting about 147.70 area. So let's see how that plays out, and if it breaches below there, then very likely we'll get heavier into shorts. Cool. Okay, let's get that. So let's go here on the ES side of things. This thing hasn't tested. Well, this is the chart that we were watching yesterday, right? The five, the eight, the same thing is happening. And if Apple comes back down to if it breaches the five on the daily, and if it starts to come back down into this number, right here, let's say about 150.37, very likely you will see this thing start to come back down below the 8 here and keep testing this 4100 area, 4109. Right now it's at 4109, so I'll very likely, it's going to come back down into that number and test that number, and if it breaches there, then we'll probably look for it to come back into 4071. So let's say 41, so 41 is about 41 points, right? 41 points roughly, 41, 42 points roughly will be 1%. And if it breaches that threshold, about 40 points to the downside, then we'll add another, let's say 50 basis points, which would be another, uh, give or take 21 points. So from yesterday's close, right now it's doing 10 points. So we are expecting, if it starts to come back down, we are expecting another 30 points out of it, give or take 30, 31 points to the downside. And if that breaches, then very likely we're going to expect another 20 points to the downside. So that's how I'm going to look at things. Uh, and this is the chart, and very likely we are expecting this to get tested today, and a bounce there, unless Apple does something else and it starts to push to the upside. Although I don't know if Apple can push to the upside today. But look at this chart here, right? This is the 1 hour chart. This is getting thoroughly oversold. MFI is all the way down here on the 1 hour chart. So, it might be a better chance of Apple bounce, perhaps right about here, around 150.20 area. We want to see this thing get tested, and we'll look for another bounce. If Apple does start to bounce from right here, then very likely it's going to push into 150, 150, then perhaps into 150, 180, right? And the mean is sitting all the way up here at 150 to 70 area. And if it starts to bounce based on this chart, then we'll look for further upside. If not, we'll still, I ideally I would want to see it come down into the five, wherever the five would be at the open, right? That's the idea there. And we'll look for that bounce because the 1 hour is pretty oversold. So where is the 1 hour? Right here. 1 hour is pretty oversold, so we'll be looking for that bounce. Let's get into some Microsoft here. Come on. Right. The five on the week is sitting all the way at 250.90 as of now, where things stand. And that's the downside. That downside is pretty defined, I think. And to the upside, this is the number 260. That's also pretty defined. If it clears that to the upside, then we'll reassess to further upside. But as of now, where things stand, 260.30, 260.50, that should act as pretty decent resistance. Let's go here with Microsoft. There's some function going on outside, and they're loud. Oh Lord! Right. So this is the exact kind of price action I'm expecting from Apple. Let's say if Apple does this, comes back into its five, and comes back into its 200 moving average, then the market will start to come back down. But if it bounces right from where right here from where Microsoft bounced, then very likely we'll see the market to the upside. I'll be very cautious, going into the day today. Very likely we're going to see screen is flashing in and out of a lot of black screen for the video. Is everybody experiencing the same thing? Is everybody experiencing the same thing? The screen is going in and out. Yeah, good for me. The same thing. I don't see anything flickering here. Mm, yeah, yeah. I think it's a problem at Neofi's end. Right. So I'm expecting the same kind of price action to happen with Apple. Come back down on the daily and daily five, and perhaps bounce from that daily five area. So, and why am I expecting that to happen? Because look at this chart, the 1 hour chart. It is getting oversold here. So that's the reason I'm looking for that bounce. Even if Apple doesn't bounce, I'd be surprised if it doesn't bounce before Powell's speech or that interview, whatever that is. If Apple starts to come back down, let's say 150.20, or even right here 149.89, or even right here 149.50 area, I would still be looking for that bounce, right? Uh, and what I would if the chop continues and Apple does stay within this tight range to the upside 152.50 and to the downside 150.50. If that happens, then very likely what I would do is uh, I would go down and sell SPX puts. Instead of getting involved in any trade, I would sell SPX puts. Why? Because by the time it comes back down, let's say here, this thing will be terribly, terribly oversold, right? So that's the reason I'll be looking for that sell. So let's say if it comes back down here, right? And then we'll look for another bounce. And if that breaches, let's say even if it comes back down here, which would be a violation of third standard deviation, royally it will be violating that. And let's say if it comes back down here to 147, it will still look for a bounce, right? And this thing is squeezing. I don't like squeezes, so I'll be very cautious, very wary of that whole scenario. Cool thing. So Microsoft expecting the same thing. If it comes back down, let's say into the five, I'll look for first bounce. That breaches very likely into this 200 moving average. This is what everybody is looking at. Majority of the market participants, they are looking for this line. Same on Apple, same on Microsoft. Let's go here on the 1 hour chart. Let's look at Microsoft. Right. So no wonder it's bouncing. And we want to see it come back down and test this number 259.70 area. And if it breaches there, very likely it's going to go hit this number about 259. That breaches right about here, basically the same thing. Half trend baseline 5, 8, and then the mean, right? 257.90 area mean is right now sitting there, and we'll look for another bounce there. If that breaches, it's going to come back down here into a 257.29 area. I'm not really plotting anything sub to the downside. If it starts to come back to the downside, not really plotting anything sub this 50 moving average, or even this number 255.80, right? And as soon as it breaches the mean, we'll of course reassess the whole situation. I'll be online, and I'm saying if it does breach the mean, and if it does breach the lower inner Bollinger Band at 257.33 area, then very likely it will come back down here, and we'll be still looking for bounces. The 1 hour chart is still looking good, and we want to see this thing happen to Apple, right? That's what we're looking at. Cool thing. And to the downside, yeah, if it breaches the mean, we'll reassess the whole situation to the downside. We'll go methodically to this number right about here, the 50 moving average, and this super trend that breaches the second standard deviation, that breaches the third standard deviation. By the time, I don't believe this is a case for today, but I'm just saying because Fed chair is on tap today. So we got to keep that, trade with an open mind, whether to the upside or to the downside. Even if it comes back to the downside, I think that would be a knee-jerk reaction, and I don't believe that there's anything wrong with the fundamentals right now. And the first thing that I'll keep I'm watching, the most basic thing I'm watching is the unsecured debt, right? That's pretty much I'm watching right now. As of now, everything else looks pretty decent, and the economy is ringing at a full employment number. So, so nothing, pretty much nothing. First thing to fall, the first shoe to fall would be your unsecured debt, right? That's the only thing that I'm watching right now. And the second thing, and then why am I so confident about things to the upside is that China, right? And I posted, I think, that tweet from Zero Hedge. So that gentleman posted the savings rate from China, right? So that money is still there. That money is still there. That money will be spent. And also, China is pushing. Chinese banks are pumping money into the system, so that will sustain, right? So the downside still, unless there is a black swan sort of an event, or let's say for some reason, let's say a couple of Chinese developers, kind of go insolvent, or yeah. So that unfortunate event, barring that, or barring any unforeseen events, I think it's fine. I think everything looks really fine here. Cool thing. Let's get into a bit of Tesla. This chart is still great, right? We just got this crossover to the upside, maybe in a short term, probably weakness, but I think this stock is still gunning for this number right about here, 222. But in the meantime, we want to go here. We want to see this number get tested. 200. We want to see this thing get tested. And if that clears, very likely it's going to push all the way up here. But this 200, very likely it is, let's say it's, I think, 198 or something. But 200 is a psychological level, even though there's nothing there. But we still want to see that thing get tested, clear that 200 202 area. Then very likely, if it clears 202, then I'll be looking for a re-entry here up to 208 area. And as soon as it is hitting this 208, very likely I'll take an exit, and wait for it pull back. Then I'll go for it again. If it clears this number, very likely it'll start to push towards this number. Today, well, that doesn't that this 21 on the month. This is not a story for today. Very likely it's going to go hit this number at some point in time next month. I don't know, even this month, but definitely not a story for today. If Powell comes through, then very likely we're going to see this thing 208. Even we just need something. I don't know what the market is looking forward to from the Fed chair speech. But if Fed chair sounds sanguine enough, then very likely we'll see Tesla hit this number, 208, 209. And let's go Tesla here. Come on. Right. So to the downside, we are still watching this number, right? The 100 moving average, we are still watching this number, 191. And if that breaches to the downside, we'll see wherever this A5 would be. Then if it breaches here, then we'll look forward for that 5 to get tested. If that breaches to the downside, then we'll look for the 8 to get tested. Again, 8 is not a story for today. Unless the 8 moves up, it's not a story for today. To the downside, I'm still watching this number around 191. That breaches, then right about here, 185. 191, yeah, if the Fed chair is hawkish enough, I think it will push this stock down around 191, this number, 190, 191. Let's go here on the 1 hour chart. Yeah, we want to see a pullback. We want to see a pullback. But today it's a news event, new event-driven sort of day. Fed chair, however the market participants would perceive Fed chair speech, then it's going to go that way, right? And then we'll be keeping a very clear watch on this. I'm still expecting this 200 to get tested for Tesla, and very likely a breather down there. And if it clears 202, then I'll be looking for 208 to the upside. And to the downside, let's say 5 and 8 breaches, then very likely the mean reversion will happen right about 193.90 area. At breaches, we're looking for 192.90. Then very likely we're going to hit this number, 191, and we'll look for a bounce. Not really plotting anything sub 50 MA on the 1 hour chart, 188.90. If it does breach here, then likely we'll start to see some, we'll start to reassess further to the downside. But definitely, as of now, not plotting anything sub this 190. Wherever the 50 moving average on the hour will be, nothing below that as of now. Cool thing. Do we have anything in particular? Darth, did we cover ES upside? I think so. Right here. So ES, no, this is not a story for today, but the game is within this number 42.13, 42.20 to the upside, and this number 40.30, 40.20 to the downside, right? So just about 200 points, within 200 points, this is where the game is will be played. The 100 moving average to the upside, the 50 moving average to the downside on the weekly. Let's go here. So upside is very likely yesterday's highs, because we. I don't think it's going to go all the way up here into 41.89. That's the second standard deviation. As of now, I don't believe that's the case, unless Fed, uh, fuck. Do you guys hear that? All right, let's stop it here. It's very annoying. I'm gonna put myself on mute. Let's move into live trading.